Hello everybody and welcome from TD Development. Today we're going to show you how to trade using Waves Wave and the basic principles. Let's start. So the general rules to trade are: first we need to identify the trend, if it's up or down, and we need to always trade with a trend. We need also to trade at specific points, not anywhere. Use money management with the risk-reward ratios, having in mind small losses and large profits. Stop trading 30 minutes before significant news and trade at least 30 minutes after the news. And the reason being that during the news the volatility is too high, and usually they don't mean anything. Means if the smart money is positioned for the currency to go down and the news are very good and the currency goes up, finally the currency will go down because the smart money is positioned to go down. So news is a fake movement usually during our trades. And most important rule is to take emotions out of the game. Now, some basic principles and tools to use. We can identify the trend using an EMA 50 on a 1 hour chart. Good points to look at are pivots, daily, weekly and monthly. This is usually when the price can stop and turn. Fibonacci, of course, support resistance, very important, 1 hour, 4 hour and daily, and the volume. So there are no special indicators needed to trade except the Waves Wave. Both indicators, one using the volume and the other one using the pip movement, and they are available at the MT4 platform, for MT4 platform at MQL5 Market on the following links. The most critical point here is if you're not able to read the chart and identify what the big boys are doing, meaning the banks, the funds and the brokers, that's the smart money. If you cannot do that, then you will not have a good success rate. One way to see this is by the volume, but since the volume, if you try to read it bar by bar, it's almost impossible to read. This is where the Waves Wave comes to help us out. Now, how to trade? First, we look at the daily, the 4 hour, the 1 hour charts in order to identify, as we said, the trend. If there is a divergence, we usually use the 1 hour and the 4 hour, meaning that if the daily is going down and the 4 hour is going up and the 1 hour is going up, we will go with the 1 hour and the 4 hour. We need to identify strength and weakness. How do we identify that? If volume is greater on the up moves, on an uptrend, and we're on an uptrend. If volume is greater on the down moves, and we're moving on the downtrend. But be careful, because high volume and widespread bars many times mean weakness. And higher volume and widespread bars down many times means strength. Finally, remember that higher prices attract sellers, while lower prices attract buyers. So when to trade? We need to trade on specific points, not just anywhere. These specific points are support, resistance, pivots, sometimes EMA 50, because sometimes EMA 50 reacts as a support, as a resistance level, and Fibonacci retracements. if there is confluence of more than one of the above points, then it's much better and have much better probability to succeed. Now let's look a bit about the relationship of the waves, the volume waves and the PIP waves. What we see here in the picture, the first chart is a PIP wave. That means the price, how many pips it have moved in this wave, and the second picture is a volume wave, which adds cumulative the tick volumes for the specific wave. So as we can see here, the volume is almost linear with the PIP wave. The volume wave is linear with the PIP wave. In both cases, this is a down wave since it's red, this is an up wave since it's green. So this is a normal flow, but there are also other cases. In this case, we can see that the PIP wave is much higher than the volume wave. These are fast moves, sometimes not backed up by volume, as we can see here, or sometimes they are backed up by volume from previous waves, so it matters what is left. Usually this stuff also happens during the news, very fast up moves without being justified by the equivalent amount of volume. And there is another relation, which is this, and it's one of the most important relations. Now this relation shows what? It shows us that the PIP wave has not moved significantly, while the volume wave has been moving a lot. This is a very important combination because we can figure out what the smart money is doing after the price breaks a significant level. This situation occurs when the smart money is absorbing either buy or sell orders until there's nothing left, and then it explodes in one or the other direction, Now some explanations and abbreviations for the charts that we show later on. Wave 0 will be the current wave, wave 1 will be the wave before the current, and wave 2 will be two waves before the current. So when we mention HV means high volume wave, LV means low volume wave, and HP means high PIP wave, LP low PIP wave. Adding a V in front of these abbreviations means very, for example, very high volume. Now let's look at some scenarios. I will not go into details to that because I have also this written on the chart. The only thing I will say, this is a change trend examples at a 1 hour and a 4 hour chart. So we'll put some abbreviations here. So CHT1 means change trend 1. Excuse me. While CHT2 means change trend 2. The details I will mention later on. And CH3 means change trend 3. So these are three different scenarios when the trend is most likely to change. Let's look at some examples. So this is a CHT1 scenario. It is very obvious. This is a 4 hour chart on USD Swiss franc. It is very obvious. From here we have our two indicators. This is the PIP wave and this is the volume wave. So as we can see, start reading from the left, the volume waves are higher, the down waves, the red ones, are higher than the up waves. the green ones. So it's very easy to see we are in a downtrend and we can trade on a retracement. For example, this point here is probably close to a fib retracement or even previous support. So having in mind the background, which is the red waves, the down waves, we will go for a short position here. But this scenario is also showing us when the trend is going to change. Look what happens here in the middle of the chart almost. Very high volume down wave. Then an immediate reaction with a high volume up wave and high pip wave. This is the largest high volume up wave all the way from the beginning of the chart. This means immediately that this might be a possible turning point, and in this case it is. We are waiting for the reaction. This is the reaction coming down. As we can see, this wave is very, very small, this down wave, so the trend is changing, so we'll start going up, and this is what happened. Let's look at the second scenario. Now, this scenario is we are in an uptrend with some up and downs, and what we see here, we see in wave 1 right here very high volume, but the pip movement is not that significant. That means that something is going on here. It doesn't mean immediately that the trend will reverse. No, the smart money but be absorbing orders and the market might go up. So we wait to see for the reaction. And what do we see here? We see a down move, it breaks a significant level right here. We see a down move, the volume is not small, and then we have a reaction up move with less volume, almost reached the same level, and then we went down. So this means that wave 1, all this movement here as far as volume without any movement in pips, that means all the smart money were absorbing all the orders, all the buy orders that the public was placing with sell orders, and this was the final reaction that will start trending down. So the trend has changed. Let's look at another scenario. Okay. Again, start reading from left to right. We see a very high volume down wave. Then we see here a very high pip wave. This could be news. But at the same time, we see climactic volume. If we look at the volumes one by one, right here. See, if you see this volume here, it's much larger than all the rest on the left of the chart. So this immediately, together with this combination, shows us that there is a possibility for the trend to change. So we wait. So what do we see after that? We see a high volume down wave, but without any pip movement. The pip movement is nothing. So the smart money again is absorbing all the sell orders that are placed in the market, and when there is nothing left, we start going up. So we broke this level, which is significant level, previous support and resistance, and after we break this level, we're ready to go up. And this is how it went. Now let's look at some scenarios when there is continuation of trend examples in 1 hour and 4 hour charts. Excuse me. So the scenarios here, we call them COTs, COT1 and COT2. I will not go into details to that, you can read it. We will go directly to the examples. Let's see one continuation example. Okay, we're on a downtrend. Okay, the down waves are higher than the up waves on the volume, very obvious. Then we see a big down wave, volume wave and peak wave. Then we continue without any significant large moves. Then we see the first high volume up wave together with a peak wave. So this means that the trend is changing. Okay, the trend started changing. We start going up, 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 and then we see a very high volume here, but without any peak movement. So this wave right here, we need to wait for the reaction. We mark the significant levels, support and resistance, and we mark the reaction. So the reaction, again, we broke this level with volumes, the reaction was down. So this was the trend, we had a small retracement, and then we continued with the trend. Okay, so again, this point here is very important. After it breaks, we know what they have been doing. Now let's go to scenario 2, which is trend continuation again. So we start moving up from here. We see large down wave here, but without any peak movement. So we break again this level somewhere around here, and we start going up. Then again, as we can see now, the green waves, the up waves, are higher than the red ones. So again we see a big red down wave in volume, but there is no peak movement. And again we break with significant volume on the up move, and we continue the trend up. So these were some of the scenarios of change trend and continuation trend. And now entry points, we usually go with a 1 hour and 4 hour as far as the trend is concerned, but the entry points should be placed on a smaller time frames. We use 5 minutes, and we see to identify the entry points on critical levels using large volume. Viewing what happens at significant levels such as fib, support, resistance, you must see significant volumes on the lower time frames before you enter. Details as far as entry points will come in the next training video. Thank you for watching, and if you're interested in this method of trading, you can download the 2 waist wave indicators for MT4 Platon from the following links. Thanks again. Bye bye.